down about 0.2% for the market, but mid-caps are doing much better. Let's get some opinion coming in on the resolution of distressed power assets under the Samadhaan Scheme. In fact, the SBI Managing Director Anshula Kant told us earlier this morning that the resolution of power assets is not very encouraging, as it is very tough to get a consensus among the lenders. However, she is hopeful of 4 to 5 power sector loans getting resolved, which would reduce the SBI's NPAs by 12,000 crores. Listen in.
The update is not very encouraging, I would say. It is the same 3 plants which we had originally identified, and those we are hopeful will likely go through. There are a couple more we are still working on. It is, the problem is that there are so many lenders and there are so many different interests, which is actually creating the problem of consensus, getting everybody to say yes. That is an issue. 4 also goes through, at least for SBI, it will mean more than 12,000 crores reduction in NPAs. A couple of them are more or less done, but again, there are a lot of CPs that have to be complied with before the deals actually go through. We are hopeful that at least, a few of them will go through in this quarter.
All right. So for the entire banking sector in the last year, NPA resolution had been the big story, and that's going to really continue in this year as well. And remember, when we talk about NPA resolutions, Essar Steel is one of the big cases. In continuation to that, there is more development coming in. And here's a CNBC TV 18 exclusive now. And we learn from sources that ArcelorMittal, which remember is also one of the contested winners of Essar Steel, along with a partner, Royal Partners, have now bid for another SR Group's company's arm, which is EPC Construction. And our colleague Ritu Singh joins us with all the details on that. Tell us, Ritu.
Well, after Essar Steel, it looks like ArcelorMittal has now set its eyes on another Essar Group company, and this time it is EPC Constructions that is currently going insolvency proceedings. We understand from sources that the Committee of Creditors will be meeting today to evaluate the 2 bids that have been submitted in the second round, and these 2 include one from, of course, ArcelorMittal and the second from Royal Partners, which is a Dubai-based investment firm. Now, we do understand from sources in the know that in the first round, the bids were too low. In fact, the recovery rate was below 10% from ArcelorMittal as well, because of which bankers rejected those bids and called for a fresh round, the deadline for which ended on 31st of December. And now the lenders are meeting to review both of these bids. The offers, as we understand, for ArcelorMittal stands at 2,000 crores overall, which includes 402 crore rupees as upfront cash payment to lenders and another 1,000 crore rupees as equity infusion into the company once they acquire it. Compared to this, Royal Partners is offered slightly higher when it comes to the upfront cash payment component. They've offered 420 crore rupees to repay the lenders and another 480 crore rupees in the form of non-convertible debentures. Now, both of these offers will be studied, but if either one of these is accepted, in any case, the haircut that the banks will have to take on this 7,200 crore rupees of debt is going to be, upwards of 85%. So a steep haircut nonetheless. But we did reach out to both of these players involved in the deal. ArcelorMittal declined to comment, and Royal Partners confirmed our story, saying that yes, indeed, it has expressed an interest in acquiring the EPC construction business.
All right, Ritu, thanks a lot for that. Well, moving on, innovation that's useful and affordable. That has been the cornerstone of the strategy that FMCG major Godrej Consumer Products has employed in 2018, and quite effectively. But CNBC TV 18's Priya Sheth and Ritu Singh say that is just one of the reasons GCPL is in the running for the title of Outstanding Company of the Year at CNBC TV 18 India Business Leader Awards 2018.